Gatekeepers of Governance, our next session today after that phenomenal, powerful session. What a privilege for each and every one of us to be right here in the same room as Mr. A.M. Nayak and listening to him for over 90 minutes. That was simply amazing. Thank you so much, Mr. Damodaran, for that conversation. And now, ladies and gentlemen, our next session is Corporate Governance and its Punching Bags. That's the session we're moving into. When things go wrong with any corporate entity, it is normal to attempt to identify those that contributed to the downfall by acts of omission or commission. Rating agencies, auditors, and the stock exchanges have emerged as the favorite punching bags of the commentariat. Is there more to this than meets the eye? Are there more sinned against than sinning? Ladies and gentlemen, requesting you to please join us as we welcome on the stage our panelists. Our first panelist right here, Mr. Ashishkumar Chauhan, is presently the Managing Director and CEO of National Stock Exchange, NSE, which he helped to form, and where he worked from 1992 to 2000. Prior to becoming the Managing Director and CEO of NSE in 2022, he served as the Managing Director and CEO of BSE from 2009 to 2022. He is known as the father of modern financial derivatives in India. He also created several path-breaking frameworks, including the Nifty Index, NSE certifications in financial markets. He is on the SEBI Committee for Corporate Governance and an advisor to the Asia Pacific Investment Council and the Central Board of Direct Taxes. He was also involved in conceptualization of the National Securities Clearing Corporation, NSCL, and the initial setup of the National Securities Depositories Limited, NSDL. Ladies and gentlemen, our first panelist joining us on stage, please put your hands together for Mr. Ashishkumar Chauhan. Our next panelist to join us is Mr. Amish Mehta, the Managing Director and CEO of CRISIL, a position he has held since 2021. In 2014, he joined CRISIL and was appointed as its President and CFO, and in 2017, he was named the Chief Operating Officer. In the latter capacity, he led CRISIL's acquisitions and change agenda while creating a growth path for the businesses he managed. Prior to joining CRISIL, he was the CFO of Indus Towers. He has a rich experience of over 2 decades in telecommunication, oil and gas, FMCG, and business advisory services, and has held leadership positions in BP, Castrol India, EY, and Exxon Mobil India. He is a member of SEBI's Primary Markets Advisory Committee, FICCI's Capital Markets Committee, and CII's National Committee on Financial Markets. Ladies and gentlemen, an applause. Put your hands together for Mr. Amish Mehta. Welcome, sir. And joining us, our third panelist to complete our panel on stage, Mr. Aniket S. Talati, was elected as the President of the Institute of Chartered Accountants of India, ICAI, for the term 2023-24. Earlier as council member since 2016 and as Vice President in 2022-23, he was highly regarded for his organizational skills and his insight into the affairs of the profession. He was the chairman of the Financial Reporting Review Board, FRRB, and the vice chairman of the CSR Committee, and the convener of Digital Reengineering and Learning Directorate of ICAI. He chairs ICAI's Research Wing and Accounting Research Foundation. He has represented ICAI and India in several conferences across the world. In his present role, he interacts with the Government of India to improve professional standards. Ladies and gentlemen, joining our panel on stage, put your hands together, Mr. Aniket S. Talati. Welcome. Ladies and gentlemen, our panel is ready. We're looking forward to us ringing the bell, making sure our audience joins us right here in the main ballroom. And our moderator of this session on corporate governance and its punching bags, handing over right now to Mr. Amish Mehta. Sir, all yours.
Thank you. Good morning, everyone. It's an honor to speak after Mr. Nayak, and it's a tough act to follow. I'm honored to have two esteemed panelists, who are extremely renowned in their own areas and need no mention. So let me, try and maybe give some opening comments on corporate governance and its punching bag. As you can see, I'm working for CRISIL, Ashish Bhai, leading National Stock Exchange, and then you have Mr. Talati, who is the president of ICAI. Today morning, all of us would have seen the newspaper talking about FTX, cryptocurrency, Sam Friedman scam, right, or fraud, whichever way you want to call it, and he's been declared guilty. Cryptocurrency, completely new few years back, hardly anybody knew what was happening. An exchange was set up, people made money, suddenly people lost everything. And, here you have a complete exchange which has gone down. In India, you had a large unicorn which had questionable practices, being asked questions about how they were doing certain things, how they are bringing out certain things, what are the disclosures. And I think there are many examples, even on the global side. I spoke about FTX. There was a similar unicorn in Singapore, again, similar questionable practice. And I think these are happening all over the world. Times have changed. You clearly see with what's happening on social media, a lot of new things coming up. The entire digital infrastructure in India has opened up. The payment scams, if I was to use that, or virtual scams which are possible, identity thefts, cyber frauds. I think we are completely witnessing a change in the landscape, both India and globally. And I think there are new types of institutions coming up. There are new types of corporates, newer entities. I think we had Nitin Kamath yesterday, newer mutual funds, newer exchanges. So I think there's a complete change in landscape, which is coming about over the last few years. And the pace of change is very fast. You have different risks which are, being called out. You have the geopolitical risk, of course, which everybody is looking at right now. But you have cyber, with all digitization, automation, you are looking at other forms of risk which are coming up, and challenges for institutions like, rating agencies or for firms, professional firms. How do you keep pace with some of these changes, the pace of change which is happening, the disruption which is happening on business models? How do you ensure that you are staying ahead in the game and you are able to really set the standard but not be a follower, but you are a leader? I think the question which comes up for some of us as institution which are regulated entity, where do you set the expectation for yourself? What is it that is expected by stakeholders? What is expected by regulators? What is expected by investors? What is expected by corporates? How do you look at entities who are having a responsibility maybe beyond the client relationship? So it's just not the relationship that we have with our clients, but there is a larger onus, larger accountability that is expected out of companies like us and other institutes which are there. And how do you measure yourself in that background, in that backdrop? I think clear challenge is lack of awareness, education, and we sometimes have the entire thing about disclosures and disclaimers, and I think it's an important element of how we put things out. How do you read a report? How do you read a rationale? How do you read some of the things which are put out by companies? What are some of the disclosures? What are some of the disclaimers? What are some of the criterias? Do you look at it in entirety, or you're only looking at the part which is disclosed and then making a decision without understanding the entire structure which might be there? I think from our perspective, I think clearly interest of shareholders, investors, and the larger ecosystem is extremely important, and that is the ask that we hold ourselves accountable to. It's just not the client relationship, but the entire ecosystem which depends and looks at the work that we do. Corporate governance continues to be in focus. I don't think anybody needs to be told that. I think we continue to be on that journey. And I think regulators have been setting that bar high every year, either due to what has happened or just that they want to be in the forefront. If you look at some of the changes which have happened on related party transactions, we have seen issues which have been highlighted in the past. There is a lot of change which has been driven on how you call out related party transaction. Accountability has undergone change. Disclosures have been enhanced multiple times, right, in the last few years. You need to talk about materiality. A lot of us, qualify materiality. You can hide behind materiality with a qualitative statement. How do you define materiality? And SEBI has now said, listen, I want a very quantitative number prescribed. So they have set up a limit in which you have to set your materiality. Because people are taking advantage. Maybe they are trying to use the leeway which is given. And I think there are many instances that we have seen in the past which points towards possible challenges in terms of disclosure and how we come across, and how we put things across. I can give you another example about form versus spirit, and I want to talk about this. How do companies or institutions like us think about regulations? Are you trying to do it in spirit, or are you trying to just meet the form? And we look at women directors as classic example. I keep looking at more than 50% of companies are still having only one woman director on their boards. They are having only one, which means they are only meeting the requirement which is set by SEBI, not going beyond. If you look at nomination and remuneration committee, you need to have all independent directors. There are still companies which don't have all independent directors. These are simple examples, should have been done years back, but we are still struggling to meet the requirement. And, if I talk from a CRISIL perspective, we have tried our best to, be ahead in the game. We have tried to go beyond the requirement of the regulation. There are many things that we have done and then help shape the regulation. Sometimes as an organization, you try to lead the journey. Things like having firewalls between business development and analytical team, putting annual default rates, trying to ask for, whether the banks have seen any default. These are things before the regulations were set out for some of these things. And we have helped shape the regulation, lead the journey, and try to make it as we believe the right thing to do, rather than trying to follow what is coming up from a regulatory lens. Still the question remains, is everything black or white, right? Or is there a judgment which is required? I wish everything was black and white and we could simply take a call, but I think we have to apply our minds on various aspects, complex structures, complex documents, legal opinions, audit opinions. So I think these are some of the challenges that you face as an institution, which you have to deal with. And the question that we keep asking ourselves is, can we get it right every time, 100% of the time? Or do you have the leeway to maybe, sometimes do things in the right spirit, but you might still have a view which is different from what maybe others are looking at. There are things like practices. You look at the tier 1 issue which happened, tier 1 bond issue which happened a few years back. Practice was different, document was different, regulatory expectation was very different. Now, what do you do in that case? So I think there are many examples like that where it is not black or white. It is challenging, and I think one needs to appreciate and recognize institutions try to apply their diligence, do it consistently, and want to stay ahead in the game, how they are being transparent, how they are setting the disclosures. I think the last thing I would say is shaping regulations, and I spoke about shaping regulations. Another example is ESG. ESG is just evolving, right? Things are just coming up. Globally as well, standards are being set. There is no clarity. Taxonomy is being set. There are different standards which are coming up, and India wants to lead that journey on ESG. So how do you try and help the ecosystem, whether it's corporates or regulators or policymakers or ICAI, to help build standards and governance which will help us evolve over a period of time, right? As we try and lead that journey on ESG. Tomorrow it could be Gen AI. Tomorrow it could be AI ML. So there are many aspects which are changing, and I think good organizations and institutions are expected to build that platform, to lead that journey, to go beyond and maybe help. And there will be chaos, right? Because there's no clarity in some of these things. There'll be chaos, but how do you lead that journey? So finally, I'm going to say the bar is being raised for all of us, and I think it's expected to be that way. The question is the responsibility of strengthening trust and credibility only with institutions like us, regulated entities, or is it with corporates, their senior management, their KMP, or should we hold the boards of these companies accountable, equally accountable, for driving trust and credibility, for being open, transparent, for working in partnership with different policymakers, regulators, and institutions like us to help drive a larger perspective. With that, I'm going to ask Ashish Bhai to maybe share his perspective, and then Aniket, and then we'll open up for Q&A.
In a way, thank you, Amish, and thank you, Mr. Damodaran and his team for calling us. In a way, when corporate governance comes, and after reading newspapers for so many years, all of us are old enough that we have been reading newspapers, I think corporate and governance are two orthogonal issues, not connected. At least that is the perception you get, that corporates in India are not governed well. And for me, being a professional in the field, sitting on the other side where you keep on watching, I keep on asking, what is corporate governance? How did it evolve? Why it is important for the society? If we don't answer that, we'll continue to sort of take it in a direction. And in a way, if you look at, the corporates are conceptual entities. They are legal entities, but they don't exist in physical realities. They may have buildings, but they are not the entity. Those buildings are not the entities. So when the corporates came about, probably 700-800 years back, and then they evolved in their overall scheme of things, I think 1850 was the first, or rather the act which made things happen in India also, 1850 Companies Act in UK. And that's where things started happening in some sort of setting up of companies. Now, what was the reason why corporates have been so important? In my opinion, corporates have been the reason for great good. Last 500 years, the lifestyle of the poorest of poor in the world has changed so much, is largely because of the corporates, because of the way they're able to collect funds from investors who have money and then deploy that collective money into other people by third persons, that is managers or management of the companies. Normal businesses in normal human societies before that were basically you do your own proprietary business, and sometimes you do partnership business. There were guilds, like in Europe there were guilds. Even in Sangam literature in Tamil Nadu, if you read, there were guilds which were doing businesses, but they were more like amorphous entities which will move, come in and out and stuff like that. So these corporates have been able to do great good to the world. And other people's money or other people's wealth or ownership was being managed, and that's where you required the management or the people, the board, which represents all sorts of interest, to kind of govern the company well, so that it takes into account all the shareholders' interests. So it used to be shareholders' democracy when it came about. And then slowly, the society found, of course, corporates have been reasons for great bad also. East India Company's early example, which although did good for its shareholders, but did bad for most others, whoever they came in touch. So corporates inherently are as good or as bad as people who manage. And why corporate governance in modern world is important, especially in India, is that today, after all, whatever we considered good, bad, ugly, 1 out of every 3 rupees Indians consider as wealth. 1 out of every 3 rupees, or more actually, Indians consider as wealth now comes out of the stock exchanges, what is represented by equities. And how does this wealth get created? Is basically by creating trust. People have invested money in businesses, some people have run them well, and they end up, the owners end up sort of doing better, their wealth goes up, and then some other people start those companies, and some of them also do badly. And that's where basically the trust also gets created by good managers and good promoters, as we call it. Ours is what I call a separate model from Anglo-Saxon capital markets model. Ours is what I call promoter-driven, Indian-style sort of corporate governance vis-a-vis the Anglo-Saxon kind of framework. But that is besides the point. The purpose of corporate governance basically is that you take money from other people, they become your owners, but they don't have say in the management unless they are promoters in Indian case or they are managers in elsewhere. And then you have to manage on behalf of everyone else, and so conflicts have to be removed and so on. That is broadly the purpose. And then, as you rightly said, some people don't follow that or follow, sometimes even they might have followed for 30 years continuously, the best standards, and for one single second, it goes away. And that is what I call Narva Kunjrova movement in Mahabharata, right? Yudhishthir spoke truth before that and after that. And halfway, I mean, in one part of his life, only one statement, which was not untrue either. He was asked whether Ashwasthama hatahat, that is, Ashwasthama died. And he said, he did not say no or yes. He said, Narova Kunjrova means whether it is man or it is an elephant, I don't know. He knew. And his chariot, which was running 6 inches above the earth, came down. So that is the standards Indians want from others, not from ourselves. Right? We want from Yudhishthir, not from us. And similarly, as Indians, we want all our corporates to have excellent governance, and even an iota of allegations will bring out that chariot not 6 inches, but it will probably put 6 feet down, and all agencies will start coming on you, including us. But that is our job, right? So don't blame me for coming after you. But that is why the corporate governance is so much more important in the modern world, especially India, is that is the place where trust gets manufactured. Unknown people sitting in Dibrugarh, in Jorhat, putting their hard-earned 1,000 rupees in companies which are in Salem, in Tamil Nadu, they are never going to visit. They probably even don't know what that company is doing, but they have a complete confidence in Indian legal system, Indian parliament, Indian judiciary, Indian regulators, Indian exchanges, and also Indian entrepreneurs and management, that money will not be wasted, and when the profit comes, a small share of her, that 1,000 rupees, will be available to her. It's such a great leap of faith, right? It's not supposed to happen in a poor country like ours. $2,500 per capita. There is no country with similar market or corporate governance framework. We are now 4th largest capital markets in the world, after US, China and Hong Kong, Japan, and we are the 4th largest market in the world. With a poor, $2,500 per capita, no market, similar type. $5,000 per capita, no market, similar type. $10,000, no market, similar type. $20,000, no market, similar type. Only one market, which is China. Whenever prices go down, government has to go and buy shares. Right? Here, you have not seen that. Why I'm telling you this is, whatever we have done as SEBI, Ministry of Finance, and also, of course, our entrepreneurs, because if they don't follow in letter and spirit broadly, we would not have reached where we were, where we have reached. So for me, as a society, we have done well, despite all odds. And that is what my take home is. Today, when I go out, discuss on, say, women's representation, Europe, America, they talk and talk. 30 years, a lot of debates and discussions I have been participating in across the world about women representation should be there on boards in all the companies in the world. They still talk, we have done for 10 years or 15 years, right? So they they talk the talk, we walk the walk. That is our corporate governance. And then still they have a right to accuse us of having bad governance because we are still poor. We may not remain poor long, then we will probably accuse them. But again, that is not the issue, right? So why I'm telling you this, even in CSR law came in 2013, right? There is no other country which has similar law. So our corporates are broadly large, overall on a macro basis. They have complied with letter, spirit, and everything else we give. Literally, we come out with newer regulations pretty much every day. But they still actually comply, and that is increasing the trust of people which has ensured that 8 crore direct investors, unique PAN numbers, are now investing in the Indian market. 5 crore households are investing in Indian markets, probably more than that. 17% of India's all population, all households are now investing directly through the stock markets. And that is, I think, a credit to all our entrepreneurs, all our management of corporates who have been able to collectively create the trust. And of course, kudos to our regulators and policymakers to make this system viable. So that's what I would say to begin with. Then we can take up.
Thank you, Ashish bhai. Aniket?
Thank you. First of all, thank you, Amish bhai and Ashish bhai, and thank you, Mr. Damodaran, for having us here and very rightfully putting this topic of the punching bags of anything that goes wrong. And I think while Ashish bhai was discussing about the definition of corporate governance, and I was having a sip of water, I was asking myself, how would you define corporate governance? And I think it's like defining the taste of water. You probably will never be able to describe it to somebody, but I think it's something that you cannot live without even a single day. And therefore, I think corporate governance, in essence, is something that will be at the core of everything. And for me, it stands for nothing but ethics, and ethics in everything that you do. And then everything else, financial reporting, non-financial reporting, so your accounting or your ESG or everything else, I think it has to be measured by the single cornerstone of ethics. And similarly at the Institute, coincidentally this year, we are in our 75th year of the institution. We were created in 1949, and when we were looking at how do you define these 75 years of the Indian accountancy profession and that of chartered accountancy, there's one word which stood out, and I think which is what Ashish bhai also mentioned, and it's trust. I think it's 75 years of trust, and as a profession, you have to acknowledge that when you get into public practice, you are custodians of trust. Trust of all stakeholders, that is the board, shareholders, the regulators, the government, people at large, and now the investors which come from every part of not just India but across the world. And therefore, as custodians of trust, I think as the Institute, there are multiple roles that the Institute plays, and I would just like to say that in terms of strengthening the corporate governance framework as well as bringing up the accountancy profession, we've always played the role of being a standard setter. So today at the Institute and in India, therefore, you have accounting standards which are largely at par with the international standards. So what can you do as an accounting profession? You can have standards which meet the best in the world. And today listed companies report on what is Ind AS, which is 99.9%, I would like to say, IFRS, and therefore complying with all major economies reporting language, reporting framework, and of course recognition, measurement, as well as disclosure which these standards require. Our audit standards today are drawn from the international audit standards, the ones which are prescribed internationally and are applicable across the globe. And therefore, we have best-in-class audit standards. But I think what we've also realized, which was very unique to the profession in India, was that we are not only restricted to the auditing and accounting standards or even the ethical standards which we draw from the International Ethical Standards Board. But today, you do valuations, and therefore, you need valuation standards, which we've come up with in a detailed framework. But now, what is extremely important is, and especially when we talk about the punching bag, is the art of forensics. And that has gone up in terms of the requirement of forensics, not just in insolvency, but even boards suo moto, for example, doing certain forensic activity. And therefore, we felt the need to standardize forensics. And what today we have in India are forensic accounting and investigation standards, where we have a detailed framework of 20 standards of how would you do a forensic from start to end, from commencing the engagement to evidence, and then coming out at the conclusion. And I think those are steps that have been taken to enhance the opportunity in terms of boards looking into certain transactions, or even regulators when they're looking at certain aspects of fraud or other wrongdoings. You need an accountant to go into the detail and see what has happened to the money trail. And therefore, we have today the forensic accounting standards that have come into play. On ESG, what you said, and I think kudos to India for taking the lead in terms of a lot of these, it may be the BRSR that we have today in India, or the sustainability standards that have been done. I can very proudly say that the Institute in India, therefore, was one of the first countries in the world to set up a sustainability reporting standards board, where we today have sustainability reporting standards as well as an assurance framework on ESG. Of course, it's a multidisciplinary practice. It's not just chartered accountants who will be doing it. It involves experts from various fields, but we are working towards how can we bring them on a platform so that reporting can be standardized. I think additionally, I would also mention in terms of the function of the institute would be to say that how do you, ensure that the membership and the firms, because when you talk about corporate governance in the listed entities, these are audit firms which are doing most part of the assurance, and therefore, are they living up to the expectation? And for that, we have built from years what was a peer review board which ensures that every firm's work gets peer reviewed, and now we made it more mandatory for firms to do more peer reviews in a much more frequent manner and in a much more detailed manner. There were instances, for example, of how signatures were forged and misused, and therefore we realized that can we put a stamp of authenticity on these signatures? And today in India, we were the first country in the world to do it, and I'm delighted that now the Income Tax Department, the GST Department followed suit with what we call the UDIN, or the Unit Document Identification Number. Today, if you get a certification from a chartered accountant, it doesn't hold any value if it has its signature and stamp on it, but doesn't have a 16-digit unique document number. Because we've seen so many cases of people impersonification and claiming to be a chartered accountant, or somebody just misusing it, or somebody disowning his signature and saying this was never me. And today, therefore, using technology, we've generated 5 crore UDINs in the last 3 years, and we know every attest function that is happening, and that's a regulatory function that the institute has been able to perform. And now globally it is getting replicated in terms of the technology and also in terms of the additional layer of assurance that we can offer. What we've also done is to see that how audit quality, which is a very important aspect and a large perception issue, can be addressed. And today, therefore, we have a center for audit quality within the institute, where the attempt is that how do you build and scale up the Indian firms. There are firms which may have international best practices and may adopt those in terms of documentation, in terms of materiality, for example, which you mentioned. How do you define materiality? It cannot be left subjective, and therefore this year, the Center of Audit Quality came up with a template where you put in your numbers, you put in the turnover, you put in your asset size, and you put in certain qualitative criteria, and the template will draw out a materiality number for you. That tells you that you're putting the accounting firm at a framework to test whether your work is being performed as per that or not. So we have today, like I said, the materialities template. We've also gone ahead and this year created a checklist for the standards, but more importantly, templates for audit work papers. So what is the expectation today that the profession should live up to? If you're auditing a property, plant, equipment, if you're auditing an investment, if you're auditing a cash and cash equivalent, how would your work paper look like? And what are the essential items that you should verify? We've come up with a framework for that, and we've come up with what are audit work paper templates to enable our firms to strengthen. We've also created an audit quality maturity model, which a firm can go into, answer the questions, and it will tell them at what level of maturity your firm is. And more importantly, give them a guidance on how you can go higher in terms of audit quality. So there is an audit quality maturity model that the institute has built in. So I think all in all, we have as a nation moved very fast in the past few years, and therefore it was incumbent as a profession, you live up to these changes. The expansion, the equity market, the kind of regulation that we are seeing, the kind of oversight and the kind of increased expectations that are there from all professionals. The institute thought it fit that through these changes, internationalization of standards, implementation of these audit quality maturity models, through templates, through materiality, through defining audit quality, we've tried to bring all of that up. What we are also today doing is understanding that data, AI and digital is going to make a huge difference and impact on the accounting profession. And therefore, what we created is a digital accounting assurance standard board within the institute. And I'm delighted to tell you that today, we are working on a digital assurance framework. What that would typically mean is there was a time, all of us know maybe 10, 15 years ago, that you could have, theoretically speaking, and some companies would have probably done that, one turnover reflected in the financial statement, a totally different turnover number which is going in their VAT returns, and a totally different turnover which was being submitted to the banks. In today's world, is that possible? I think the answer is probably no, because, for example, the top line of your financial statements, which is your turnover, can today easily be tallied to your GST network. Entire sales that you are doing are being reported to the authority, and therefore this is a third-party assurance that you as an auditor can take and look at what you can verify from third party. If I have a 10,000 crore turnover, my GST sales for that year, of course, barring reconciliations, cut-off year-ends, etc., can probably be 9,500 or 10,500 on the GSTL portal. But I don't think today it is possible for you to have a 10,000 crore revenue on the books and maybe just 1,000 crore on GST or VAT. I think those days are gone. And therefore, how do you use these external sources to provide digital assurance? When you're saying I have an employee or payroll cost of a few hundred crores, today I can go to the PF website and look at what are the number of employees, what is the payment that the company is doing. Going back to the turnover number, if somebody is saying that 30% of this turnover is export sales, can I then ask the firm that, look, you can also go to the DGFT or the Customs or the Commerce Ministry portal and look at these turnover from the perspective of the shipping bills and see whether this is actually an export turnover. And you get third-party confirmation of what is the export that is happening. So yes, I think a lot of capacity is being built within the profession to see how we are able to live up to this changed expectations and the changed environment that is there. I think as the profession, as the institute, we hold no brief for anybody who's involved in connivance. But yes, I think on the last question that you asked, can you get everything 100% right? I think that would be an ideal scenario. We can only put in the best frameworks to see that you get it right almost all of the time. And I think we should all aspire for a world when you can do it 100% of the time. That's all I think I would say in my opening remarks. Thank you.
Thank you, Aniket. And maybe I'm going to pick on that, Ashish bhai, this thing about, are we expected to get it 100% right? I mean, that's the, if today you ask me as a CEO of an institution or any of us, right, can we get it right 100% of the time? And what is the expectation? Why that expectation?
In a way, we as institutions and collective individually also are people who are supposed to help people create that trust, right? We give different types of information. That is, exchanges collect information from the corporates on their quarterly results, their material events, and any other changes and things like that, shareholding patterns and all. You guys have rating, the chartered accountants provide the profit, loss, balance sheets, all those details. Now, when people are putting their hard-earned money, naturally the society has expectations that all of us do our job well, in time, not delayed, because justice, delayed is justice denied except in Indian court system. But basically, at least people still have expectation from other institutions in India to do things in time. And so and not only in time, but also ensure that it is actually correct. When it is found later on that it is not correct, and people start thinking that everyone can do it, then literally whenever such issues happen, once, twice, thrice, as I said, we manufacture trust. And we drink out of the same pond, all of us. All of you, all the entrepreneurs, all corporates, everyone, right? And anyone poisoning by giving bad information, fake information, we are basically poisoning the pond, and all of us have to suffer, right? And that's where the society's expectation from us is that we do things 100% right and not go behind the situation that we are we have done our best, but we don't know, or we say that whatever management has represented, we have presented to you, we have hidden something, we are not responsible, then why we have been kept, right? That is where the society's expectations, in some ways, last 70 years plus, the corporate governance standards in India have improved so much, is unbelievable. 30 years back when I joined, 32 years back when I joined this industry, annual results were a rarity. There would be invariably 18 months and even extended periods all the time. Getting an annual report, even as a student, was a difficult thing for me. Because only few people will have those reports going to them. And so from there, now we have quarterly results, every information available on the fingertip. The data which is given is on XBRL, so that if you put it in a database, you can check whether they all add up or not, because sometimes the annual reports, P&L doesn't add up only. So, and so even our own softwares actually ask questions to those people, the corporates who are giving us the information, saying, this seems to be wrong, please check and come back, which was not true when they were giving us faxes and letters and PDFs and all. And so lots and lots of things have changed. India, in my opinion today, is pretty much the best corporate governance market in the world. There is without doubt, although people can continue to accuse us on many things, but today there is no similar markets where data is available to people free of cost on real-time basis, as and when companies provide. And quarterly results, if they don't come, then twice it doesn't happen, then promoters, shareholding gets locked and things like that. No other system, no other sort of country in the world does it the way we do it. And that's also being represented by more foreigners investing in India, but more Indians trusting, and that's why our responsibility goes up. So the way I look at it is, it was trust your board because they are wise people. From that, we came to saying trust but verify. Then we said, no, verify and trust. And then verify and don't trust, right? So we have come all this entire journey, but overall, the quality of every single institutions, their reports, everything have improved tremendously. There will be differences, there will be expectation mismatches also, and there will be people taking advantage of variety of things. As and when that is known to the society, like he mentioned about that unique identifier for a document issued by a chartered accountant, is when people were actually faking the data themselves, or even chartered accountant was faking and then saying, I have not given, and all sorts of things. Now, if you keep a repository of all documents issued in the ICAI's big data cloud, then, or big data wherever they want to put it, then naturally that even CA cannot fake, nor the person can fake, and everyone, any investor wanting to look at, or any government agencies wanting to look at, will be able to figure out whether this was issued or as and when they want. And similarly, now NSE is going to come out with the newer websites, not exactly NSE website, but other websites where a company is paid GST recently or not also will be available. All the legal cases which are going on in any courts, as much as we can collect from various courts against companies, their directors who are directors in other companies even 5 years back, because there will be conflict allegations later on and things like that. So we are also putting that data which we use into public, so that all of you can also sort of take that data, like the way he will put it, I will also put it, and so that more and more data available with public, somebody will look at it and things like that. But overall, we are actually reducing the gap of the expectations versus reality using the latest technology. And there is no country, I can assure you, the way we have done UPI or the way we have done stock markets. Today, NSE is the largest exchange in the world now in terms of number of trades happening every day. Sometimes it does 45% of trades of the entire world's all exchanges put together, right? So why it has happened is because we have used as a society technology which is coming up, and we have leapfrogged. We have leapfrogged compared to other societies. And we don't have that kind of lobbying power which stops America from implementing women's representation on board or going T+1. And because lobbying and lobbyists are very powerful. In India, they are not. Our bureaucrats are more technocrats than any one of us. So they also visualize what technology can do. They implement GST, and they can also tell me what to do in my business and his business, right? So that's where we have become a very technocratic society, and the standards which we now expect from our corporates are like way above what rest of the world expects from their corporates. And in some ways, largely I would say we are meeting that. There will be some gaps, and although perception may be that our corporates are not well governed in some ways because in media what you get is a man biting the dog, right? And since India is 17% of world population, there will be at least one newspaper filling or two newspaper filling men biting dogs. But normally 10,000 times more dogs bite the man, but we don't look at that as news. And we think in India, all the men keep on biting dogs, which is not true. And that is where basically I kind of...
So I'll ask one question, and I'll ask the audience to maybe, keep your list of questions ready. I'll come to the audience. So, this thing about awareness and education, and I spoke about that, right? As an institution, we also have, there's an expectation that we will go and educate because things are becoming sometimes more complex. What standards you are following, what criteria, what guidance notes, So, I think the larger question is, can institutions hide behind disclosures and disclaimers? Because if you see a report, Aniket bhai, I mean, all of us have and there are many smart people who write very well. You can hide behind, you will not know what exactly is written. The point is made and still it is not known to people. So how do you deal with that?
So I would say that disclosures, disclaimers are going to be part of any kind of assurance that you provide. But I think it should not be used as a veil to hide behind the work that you are expected to do and the kind of quality of performance of service that is expected out of you. For example, look, today, as if you are sitting and doing an audit report for an enterprise, it is not just going to be the financial numbers that will decide your disclosures, for example, on an audit report or even the financial statements. You have so many other non-financial issues, for example, a court case, a litigation. Now you will typically go out to the legal experts, get legal opinion, and you know it as much as others that you can always get very two strong views of the same facts.
Different opinions, yeah.
Then you'll get two different opinions on the same item, and then how much of your expertise and judgment you can do. And therefore, sometimes you will find that you would have said in your report, saying based on the report from this leading law firm, this is what the management's perception is, and you make your individual assessment out of it and saying, is that a reasonable inference to draw from the situation? Look at maybe past precedents, look at what the legal opinion says in terms of why they are forming and arriving at that view, and then form your opinion. But definitely, I think it should not be used as a veil just to say that you put out a disclaimer or a disclaimer of opinion and just say that, well, I couldn't do this. I think those days are behind us. Today, you have very detailed reporting requirement in India. It is not just an audit report that you give out. If you're doing a report of a listed entity, for example, there is going to be a report on Caro, which is very descriptive and detailed. And like Ashish bhai mentioned, I think nowhere else in the world you have such a detailed reporting framework. Yes, the challenge is that in so much information, will you miss out on what is important? And I think there it's going to be the role of everybody coming into play, because I have seen for one, where auditors have not just reported in Caro or any of their disclosures, but in fact even given a qualified opinion. And yet the question that asks is, and I think people say there is the power of the pen, but there must also be the power of visualization and somebody reading what is written by the pen. And therefore, when you write an opinion or you qualify our audit report, what are we doing overall on a qualified opinion? I mean, there have been instances when people would have qualified saying this is an intangible which is created. Look, I don't know whether this is an intangible. That's all I can do. The understanding, I think, in the common parlance has to also be that the financial statements is the responsibility of the management. It is the management which will drop the financial statements. They make those financials and then tell you to give an opinion on it. My role begins as a chartered accountant and as an auditor on the basis of the financial statements to see whether that is true and fair in terms of the opinion that I can give. And when I'm doing that, I think in that process, there will be, of course, like I said, different opinions, different aspects, but also the understanding that the management has to take certain calls. And therefore, your role will be restricted. Second, we all have to be appreciative of the fact. Today, you have limited reviews which go out in 45 days. An audit report typically which will go out in 60 days from the end of the financial year. And therefore, I'm not looking at the entire population of data. Having said that, yes, today with technology, with artificial intelligence and so much information being available in digital, I can at least have somebody else or maybe a system look at it, which I typically cannot look at. So I think all in all, I would just say that it is not a disclaimer which is going to suffice, but there will be situations where you will have certain issues which you will have to disclaim because you do not know everything. You do not have the time to look at everything. And more importantly, even if you've written something, for example, if I've qualified an intangible and yet you have somebody going and financing that intangible, I think then to expect and to hang the auditor's head just to say because, well, why did this happen? I think, so there has to be a shared responsibility. That's what I'm talking about.
Thank you. Aniket, I'm going to open it up for the audience. Okay, let me come to the gentleman here, the first gentleman. Okay.
Good afternoon. I'm Surya Narayanan, and I have a basic question on governance. What I have understood this last 2 days and even earlier is governance should be a culture. And but what I have seen happening in India is instead of governance being practiced and then getting codified as regulations, here there is a blowout somewhere, then regulations come and governance follow. So do you agree with this statement?
In a way, your observation may be correct because of the reason that whether we should go for the rules-based framework or principles-based framework. Because governance in a English sense or even Hindi sense or Sanskrit sense is broadly well understood in everyone's mind. At the same time, everyone will have a lot of non-overlapping concept of governance. And governance when it comes to you is different, vis-a-vis governance you expect from others is different. So we have what we call self-dharma versus collective dharma and things like that. So we are all very good at rationalizing and all, but overall the principle-based regulations or principles-based governance or any other framework in India has not worked, because the person who gets punished goes to the court and court says, where is the regulation exactly written? And when you write exact, again there are smart lawyers who find out ways to also kind of create doubt on that. Then we have to also plug that loop and then that loop and that loop. And that's where all these things happen. But overall, why this is done is what you need to understand. Because the expectations of the public on the regulatory authorities or on the parliament or anyone else is much more in India than rest of the world. There is no laissez-faire in India. When people make money out of listed companies, it is their brilliance. When they lose money, they want somebody's head. So that's why both of them are saying ki humko mat pakdo. Management ko bhi pakdo. Similarly, they will want government, why didn't you? I may be not looking at it normally, while as in US, there is a laissez-faire market, which is, all this is fine, but ultimately buyers beware. Right? Whoever invests has to look at all this and then also apply their brain. But in India, the public expectations, the media wants to shame regulators. It is nice to shame them, right? What will they react with? Some more regulation. So unless you understand that ours is what I call a market where everyone should make money, and when somebody loses or markets go down, somebody's head should roll, and also new regulation should come. So that is what is happening, because we are expecting it. We are actually enforcing it. All of us put together with our rationalization, all of us are brilliant, right? I mean, Indians are brilliant by nature, right? And we think, and then we come out. And similarly, regulators are also Indians. They also, not only they think, but they also put the best thinkers in committees. And best practices across the world is collected. So earlier I used to say, that a large corporate would employ BCG or McKinsey or Bain and get you the practice. Today, the regulator will give you on platter, best practice in the world. No money to be spent. Only thing is you have to follow that.
Yes.
This has been a very substantive session, and my name is K. Jairaj. I want to ask Mr. Talati, and if other speakers can also join, on, the audit committee in all companies is really regarded as the cornerstone of the governance and financial probity process. So in the wake of that, what is your take on this, and are there any best practices that you can tell by which the audit committee can have a stronger role?
So I think today, if you look at, as we speak, the role of the audit committee is being spoken about, talked about, and you're reading it even in the media, the expectations there. I know they will meet once in a quarter before the results, or maybe 5 times in a year. And therefore, I cannot say that they are the management. But at the same time, I think the role of the audit committee is to have that third eye in terms of not just the management looking over the oversight, but having somebody else come and look at, for example, what is the internal audit report saying? What is the coverage that the internal audit is doing in terms of the number of transactions that are covered? Are you doing a real analysis of risk assessment? Today, somewhere risk assessment is left to the auditor's judgment and saying it's a part of your audit standards and therefore you have assessed the risk. I would say, why should not risk become a process where the audit committee also says, look, this is an organization, this is the nature of transactions, this is what are the similar instances which have happened in the past in a similar industry. And therefore, can you look at, for example, revenue recognition and tell me that whether revenue recognition is happening as per the industry practice, or are there challenges that the company might book revenue and that receivable will sit in my balance sheet and I will never be able to realize that? Am I just continuing the revenue realization and therefore the receivable forward on a continual basis, or is there some end point to this game? Now, these are questions when the audit committee asks, I think it ups the game for everybody, for the management and for the CFO, in terms of making sure that you have processes, you have internal controls defined, you have a matrix which you can then judge it by, you have an internal audit system which becomes much more robust and knows that I'm going to be answerable to the audit committee. And of course, for the statutory auditor, there is so much wealth of information available for him to appropriately arrive at his opinion and state that whether this thing is done or not. So I think what I would just say in terms of the best practice that you ask for in audit committees would be more engagement, looking at accounting policies, principles in terms of whether they are meeting the industry best practice. I'm not asking them to be auditors or expert accountants, but being on that seat, I think looking at what is the industry doing and whether it is being aligned with the best practices globally. Also, just as an ending point, maybe if you feel as an audit committee that this is an area of risk, I think why not have a suo motu forensic done, not just for the purpose of having forensic always as a fraud or a fact-finding exercise post facto. It can be a robust exercise that you may do on certain accounts, certain areas of the financial statements on a suo motu basis. I think that itself, it's like a speed breaker, because you know there's going to be a speed breaker coming in front of you 300 meters ahead. You will slow down the car before hitting the speed breaker. I think that's probably my 2 cents on that. Thank you.
For me, more philosophical, because they are what I call detailed people. I sort of sit in a place where I keep on watching their reports and then try to think, what is it that we are trying to figure out in corporate governance as board level, audit committee level, even people like me whose job is to keep on finding other people, right? So, one is the asymmetry of information. Inherently, the management has more information than the board. And naturally, the board has little more information than the outsiders. So, asymmetry of information. Corporate governance has to try to reduce that asymmetry to 0. Now, 0 is not possible. So, it has to be tending to 0 in, if you are a mathematician or engineer, you will know a limit problem. That it will tend to 0, even if you work very hard, never becomes 0. But try to go towards removal of asymmetry of information wherever possible. Then asymmetry of power. That management has more power to take decisions on behalf of the company. And even some of the promoters or the shareholders who have sort of board seats and also executive responsibility, they have more power. So how do you try to figure out whether that power is utilized in a more judicious way and a more fair way, right? And third part is what I call conflict management. Is there conflict of interest? Is there agency conflict? Because they are supposed to be the agents of whom? Shareholders. But usually in Indian history, we say, we give tremendous examples of people who overcame their agency conflict and became the demigods. But they became demigods only because they were exceptional people. Normal human is supposed to actually indulge in agency conflict and continue. And your job as a board is to try to figure out all those conflicts that happen of all sorts of things, right? And say that this is not possible, that is not possible. Of course, the government has helped or regulators have helped by telling you not allow related party transactions, majority of minority. All this is basically a tool, which again, in a way, India only does. Many of these tools are, even to the smaller shareholders, are not available in rest of the world. But we do that because slowly we have kind of been on the thinking role. We are the leaders in thinking about how to do corporate governance in the world, right? But if you handle these 3 broadly, in my mind, you have done well on a philosophical basis.
So I'm going to add a different perspective. You spoke about role of audit committee. How do you differentiate that from the role of management? What is the expectation you would have? A level of skepticism. So, just taking related party as an example, most companies who would have related party, you would have disclosure in number of lines, right? It's very difficult. Small font sometimes, number of information, right? How are you going to really figure out what is the question to be asked? What is the unusual transaction? Is there a new transaction? What is the benchmark? There are things which you would want to understand so that you are making sure that you are on top of what is being put out in front of you, right? You are not being managed. I'm saying that in the right spirit. I think, the other thing I would say is that I'll give you an example of a regulation which has come, right, for rating companies. Rating companies have been asked to go and meet audit committee of companies whom they rate once in a year, to basically try and, share a perspective, ask if there's anything which they know which might not have been informed to the rating company. And at least in our experience, since the time the regulation has come, we have not heard from any audit committee telling us about any issue. And then we find sometimes that some of the members of the audit committee have left the audit committee highlighting issues of governance. So what is the role I would expect from an audit committee? If we have met you and you have told us there is no issue, and then suddenly after a quarter or two you put out in public domain that there were a lot of issues and hence we are stepping out. There is a larger onus, right? You are not the company, you have a role to play. So I think there's an expectation that all of us would have from each of us. And I think that is something to be kept in perspective when we are looking at our responsibility on some of these committees.
Mr. Damodaran has a point.
Yes, sir.
Thank you. That was a lovely session and lots of takeaways. I have a question which is somewhat discordant. Let me raise that. Some 20 years ago, I made a statement which wasn't received very well at that time, which is that we live life in the shrinking space between disclaimers and disclosures, and that space is shrinking and we're living there. Now I think everyone has recognized the importance of disclosures and disclaimers, both of that. Now my question is this: as I look into the future, and with audit committees being given more and more responsibilities, will there come a time when audit committees will resort to disclaimers? Will audit committees say that, okay, we are doing all of this, but we got to protect ourselves, so we will craft some disclaimers? The reason I'm asking this is, increasingly it is being felt, and some have articulated this, that audit committees and independent directors exist to protect the promoter from the promoter. It is really protecting the promoter from the promoter, his greed, his short-sightedness, whatever. It's the audit committee which protects him from coming to grief so that he doesn't pay the price going forward. So with audit committees becoming larger than life in a sense, in fact making boards seem irrelevant in regard to certain matters. The other related point that I wanted to ask is, you use the word skepticism. Of course, Aniket has been hinting at the being a much younger man. I used to know his father when his father was the president of ICAI. This is the second generation president that I'm interacting with. He didn't quite say skepticism, but he was pointing us in that direction. Will audit committees also have to develop a sense of skepticism? And if that happens, isn't there a contradiction in roles? This is a subset of people drawn from the board. So you are being skeptical in regard to decisions that are taken in the board. Where do we get there with all these kinds of expectations? I'm talking about the expectations that, the corporate universe and the entire ecosystem has from all of you. But I'm stretching it to the expectations from the audit committee. I sat at one point of time on 6 audit committees, which was something like working 18 hours a day if you actually read the papers, right? And I can tell you that it's much more fun being on the board than being on the audit committee. It's much more fun.
So I can maybe give a perspective and happy for you to share. So my sense is sometimes I think the regulators or the policy makers are pushing the accountability to boards and audit committee, which should be the accountability of the management, right? I think ultimately management is running, and you have, KMPs, you have, executive directors. So there is an expectation of the company doing what is right. They are supposed to do whatever has to be done. And the board and the audit committee has a role of governance. But you ask, a lot of times today we see that, board is asked to confirm, audit committee is asked to confirm, and the amount of time, and there is no way. It's all dependent on certificates and, various aspects as assurance, because there's no time, like you rightly said, sir. So I think there is a dilemma which one needs to think about, and how managements will help audit committee in meeting that dilemma, right? How do you make it easy for you to have that dialogue, that look at that information to help you make that right decision, right? Even if it means asking the tough question. And I think the other thing which, you spoke about disclosure and disclaimer, and I know we've had multiple chats on that. I think that is something which, it bothers all of us, right? Because we are dependent on, let's say, an auditor certificate, or we are dependent on a chartered accountant certificate, a lawyer certificate. How do you read, what is being written? And there are limitations on scope. I mean, a lot of times we don't even read the limitations of the scope. And I know, we have had dialogue at the audit committee saying, listen, why was this not highlighted? Because we thought it's absolute. So I think, you need to, and that's where the skepticism point comes in. That I'm not saying skepticism from the board decision. I'm saying skepticism of what is being presented to you. You need to have that, and that is the healthy dialogue between a company and the audit committee and the board. And I would say, as management, I would respect that. And I would want to be pushed in that direction, knowing it is not an easy journey. But believe me, that's how you make a company stronger. If you go with everything being agreed, I'm not sure that's the right dialogue to have.
This is something that I subscribe to. Right? But have we moved to distrust and crucify?
No, that's why I said, saying we were in trust only, then we went for trust and verify.
No,
trust
are we
but
in
verify. Then we
distrust and
went to
crucify?
verify and trust, and then we went to verify and don't trust.
I think we'll take the last question because the time
Last
question from you. Yeah.
So, the elephant in the room really is related party transactions, right? By and large. So, why doesn't the institute push for abolition of RPT? No, I'm serious.
So I think, look, it's...
Sir?
I think... I would just say this. Look at the international classification first and foremost. I think it's something which is global. It's not something unique to India. And it's a disclosure. Related party transactions is what? You are identifying the relationship and also putting across the nature of transaction and the amount which is involved. That is typically what an auditor would verify and go through. Today with what Ashish, for example, mentioned, they're putting it on the NSE portal. I was delighted to hear you can look at. Today it's much more easier for you to identify related parties than you could common directorship, common ownership, etc. than was earlier. You were always at some point relying on the management identifying those related parties for you, but now there is an opportunity for you to verify whether some of these parties actually are related or not. So I would say that just totally doing away with related parties, I think that's not something which is there internationally or what I would subscribe to. Just on Damodaranji's point of skepticism in the audit committee, I think audit by itself, the word imbibes some amount of skepticism, though I would hate for a day that audit committees start giving disclaimers in terms of what they have seen. I think end of the day, sir, it's about, Ashish very nicely gave the example of the dog biting the man and the man biting the dog. I think it's about the road accident. You can at best be speed breakers or traffic light. But I think the blame has to always be on the driver who's driving this seat and car. And therefore, I think it's, end of the day, the management which drives it. And therefore, I think we can only have better quality speed breakers or better quality time traffic lights, especially in a city like Mumbai, speaking. But yes, end of the day, I think it's the driver who's going to drive. Thank you.
Thank you, everyone. I think thank you.
We'd like to thank our esteemed panelists for providing very, very insightful insights. We'd like to invite Mr. Damodaran to join us on stage to do us the honors. Presenting a memento to each panelist. It is a caricature and a certificate for planting 10 trees in the Sundarbans in their names. Thanking Mr. Amish Mehta for moderating, Mr. Ashishkumar Chauhan and Mr. Aniket Talati. Thanking our esteemed panelists. Thank you so much. Thank you so much, Mr. Damodaran.